Welcome to this walkthrough of the Moves Analyzer. This tool shows you not just how a stock moved around earnings, but how the market priced those moves, how it's pricing the upcoming move now, and what that means for your next trade, all backed by statistical insights and smart analytics. Let's take a look. Start by selecting a stock. You see upcoming earnings for the next few weeks, and if you're interested in other stocks, just toggle to the past section. You can filter over the past 2, 5, or 10 years using this dropdown. You can also isolate periods when the VIX was at levels similar to today, allowing for comparisons under comparable market conditions. At the top, you'll see our earnings volatility score, a quick way to gauge how volatile this stock tends to be around earnings based on past cycles. Below that is the earnings table, a detailed view of how the stock behaved around earnings. Let's explore its columns. The first column shows the implied move. This is calculated using the straddle of the closest expiration just before the release. Next, you'll see the average earnings move before that date. This acts as a benchmark that gives you a sense of whether expectations were higher or lower than usual. Then we look at the 3 key days around the release: the day before, the day of, and the day after. For example, if earnings were released on a Wednesday after market close, the day of release would be Thursday, the pre-release would be Wednesday, and the post-release would be Friday. For each of those days, you see the maximum intraday move, either up or down. The average move noted earlier refers to the average of the day of release moves. Move duration tells you how long the stock kept trending in the same direction after the release. And finally, we include market context, showing how SPY moved that day and the VIX level at the time. Overall, this table gives you the context you need to analyze patterns and prepare with precision. Next, scroll down to view the histograms and statistical summaries for the pre, day of, and post-release moves. The histogram is a chart that shows how these moves were distributed. The x-axis is the move, while the y-axis shows how many times that move occurred. This helps you quickly see the shape and spread of the distribution, and to the right, you'll find our estimates of move ranges and how extreme the unusual cases were. You'll also see quantiles, which show how the moves are spread. For example, 20% of past moves fall below the 20th percentile. The 50th percentile, or the median, marks the midpoint. Half the moves were smaller, half were larger. We also show the average move and its standard deviation, which gives you a sense of a typical range. Most moves fall between one standard deviation above and below the average, so you can see what's normal and what's outside the range. In the next section, you can explore how implied moves have historically compared to actual moves, and how the current one is priced. First, check how the current implied move compares to the average move. That gives a baseline for what's typical. Then, compare it to the last implied move. This shows if expectations have jumped or dropped since the last time. Together, these tell you if the market is pricing in something unusual and possibly setting up for a bigger reaction. Next, you can visually explore how implied moves compare to actual earnings moves. In other words, implied versus realized volatility, along with the average move in red as a benchmark. Now, let's look at some stats. This box shows how often the actual move beat the implied move. You can also see, on average, how much it beats when it does, and how much it misses when it doesn't. This helps set expectations around beats and misses. For example, if you're trading long volatility, you want the average size of the beats to be bigger than the misses, so when you're right, you win big, and when you're wrong, the loss is small. Here's a quick tip. If the current implied move is higher than the historical average, the market may be expecting a bigger than usual reaction. Check how often that kind of expectation actually played out, and whether the stock tends to beat, match, or fall short of that expectation. Below, we focus on direction. This section breaks down the direction and size of the stock's earnings moves. You see how often it moves up or down, and by how much on average. It's a quick way to set expectations once a move starts, especially if the direction is clear early. Overall, this screen gives you the full picture, expectations, outcomes, and everything in between. Go ahead and explore it, and don't hesitate to reach out if you need help.